Hello, welcome back. It's Monday, which means Francois Owczarczak from MJT is back in the studio with his market analysis. Francois, thank you for joining us.
Hi, Tom.
So we were cautious last week on the market. We've seen a correction this week. Let's start with stocks and the S&P.
Okay. Well, we're back on the mosaic for the Dukascopy TV broadcast. We have a euro dollar, we have cable, we have Australian dollar, gold, dollar Swiss, dollar yen, 3 months S&P futures, and 3 months Treasury bond futures. So we're going to focus first on the S&P. We're going to look at an investor's view, which is meant to offer investors a perspective of 3 investment horizons. So you have the weekly, which is the long-term chart, the daily, which is the medium-term chart, and the hourly, which is the short-term chart. Now, it's meant to show trends at a glance. And if you look at trends, the long-term trend is still heading up and still has some potential. Although we're looking here after this very long bull market that we've had at very aggressive targets. But in these aggressive targets and in this context, there would still be a bit of potential. Now, if we focus on it, we are getting to points which are quite expensive, with our 2 envelopes touching each other here for the first time here, almost for a second time now, and our risk index well in the red. So this is certainly we're getting towards exhaustion, but we're not quite there yet. So that's the longer term. Now, the situation, I would say, is even worse over the medium term, because again here you can see our envelopes touching each other, our targets have been met, and we are also here in the red again in the overbought. Now, if we take the two together, we believe this probably is a justification for the current correction on the daily. The weekly would have a bit more time to go. So we think, and we've been bullish for the last 18 months, we think it's a bit early to jump all south and say, well, this is the end and it's turning around. But what we could say is that it's a very expensive environment and one should be careful, and it's probably a market for traders now more than investors. Now, if we look at the hourly, we've seen this a correction which has been developing for now about 10 days. There's probably a bit more to go with its targets. If you look here, there's probably another week to 10 days and probably another, what is this, about 2-3%. Now over the short term, we might see a bounce this week. As you see, the oscillator is very well in the oversold and the envelopes are touching each other.
Okay. Let's take a look at currencies, if we could, Jean-Francois. Euro dollar, not much more from sort of Draghi's side of things, but the euro continues to strengthen. Is that concern? What's going to happen next if we keep seeing the euro strengthen? Well,
Draghi has said it this week, and they will probably adopt a much more easier stance on monetary policy. But in essence, I think the whole story is around what is happening in the US, and if the US can manage to generate some growth or shows some growth, because that would probably mean that Yellen is going to be able to push through less quantitative easings, that people could see rates normalizing or coming back up over the next year or so. And it would probably mean that if everything falls into sync, that the dollar will finally correct up and react. But at the moment, we don't see it yet. And so the euro is still moving up. And if we focus on it also on an investor's view, the long-term chart still has a way to go. And even if these targets look quite aggressive, at the moment we're still pretty much in the middle of the range. The envelopes are still heading up, there's still no stress, and the oscillator is still pretty far from the red. So it's, although unconvincing because it's been very gradual, it's been an uptrend and it's still here at the moment on the longer term. Similarly to equity markets, we could see that, the daily medium term is quite exhausted. It's also an expensive market now. We've been hitting against our envelopes over the last 6 months. It's already the 3rd time we've touched them. Targets have been achieved and we're well into the overbought zone. So I don't believe there's that much a potential for groundbreaking breakout, but it may nudge a bit more in just straining everybody. But I don't think there's a game changer here over the next month or so. Now, over the short term, we're in an uptrend. We talked about a bounce last week more than a very a widespread uptrend. But if we see signs during this week that this uptrend is sustainable, there's a bit more potential to go, probably above 139. But I need to see how it reacts in the early stages of this week.
Okay, moving over to Japan, dollar yen. It's still strengthening as well over there. What's the story over there? What have you got for us here?
Well, basically, similarly, people usually go into the yen when they're risk averse. It's a defensive currency. And so, indeed, if dollar does weaken against the yen, it's also a sign that, well, maybe things are not as well positioned as we would like in terms of growth. Mm-hmm. And so it's a proxy for concern. And so even if the long term still seems to be heading up, and I'm quite confident that there's a bit more to go here, over the medium term we could see that at least from a time perspective we're pretty much towards the end of this move. We've pretty much reached the targets, and we've just went up into the overbought zone and out again, which is never a very good sign. So at the moment, dollar yen is under pressure. And I'd say something similar with the equity markets, at least over the short term, there's a bit more to go. Also here, over the very short run, there's a bit of exaggeration, so we may see a bounce in the beginning of this week.
Okay, let's finish on the shiny stuff, gold. We've seen a notch up in gold because we started the week really with the European stocks in the red. Do you see a slight trend possibly picking up here, or is this mainly the sort of geopolitical news specifically with Ukraine?
Well, to be honest, I was expecting much more of a bounce with what's happening in Ukraine. Here again, an investor's view, the long-term chart is still a negative over the next few quarters. We would still label the current correction since December as only a correction. Bit of exaggeration here, and did justify the bonds over the short term, but we believe there's still a potential over the next few quarters. So that said, in this context, if we look at the move which is developing on the daily, well, we did see quite a strong move into mid-March. We barely made it above our corrective targets to create this impulsive move. It was really a matter of a day. So I've been quite adamant to raise a concern over the last few weeks and saying, well, it only nudged above our corrective target. So I'd need some more reconfirmations to really see a breakout here, especially that the weekly is still in the downtrend. So I'd really need to see some momentum picking up here over on the daily chart. And as we can see on the hourly, well, we're still in a corrective move up, and which has been gradually moving up since early April. I'd want to see it above 1337 or 1338 more exactly over the next week or so to gain that kind of a momentum. Then it would move in impulsive territory on the hourly, would give a chance to the impulsive move on the daily to materialize, and we could start maybe thinking that the weekly trend is a bit too negative. But at the moment, that's not the case. So I'm still hanging on to my weekly, which is negative.
Some food for thought there for the gold bugs, Jean-Francois. Thank you for coming to the studio once again.
Thank you.
That's all from Dukascopy TV right now. Stay tuned though, we'll continue to bring you updates and exclusive interviews. But for now, from me, bye-bye.